Good morning, everybody. My name is Emilio Hernandez. We're getting ready to start the webinar today. Welcome. We're glad you can make the time to join us in these discussions to go over the findings of the smallholder national surveys that CGAP did in Bangladesh in partnership with InterMedia. I'd just like to mention a little bit the structure of our webinar. We will start with a presentation of about 20 minutes where Alex Moeller from InterMedia and myself will be sharing with you some of the findings and insights we've collected so far for smallholder population in Bangladesh. And then we have our guest speakers, Majidul Haq and Shamaran Abed, who will discuss the findings. You will see a short bio of them when they're speaking. Majidul represents the MSTAR project in Bangladesh, and Shamaran is director of the microfinance and graduation programs in BRAC. And after that, we'll have a 20-minute session of questions and answers. However, please do send your questions and comments at any point in time through the chat box, and make sure you make those comments visible to all participants. We'll be recording your questions so that when the question and answer session comes into place, we can quickly already start answering and commenting on as many questions as we can. So thank you very much again for joining, and we'll go ahead and get started. So the Financial Innovations for Smallholder initiative here at CGAP really aimed at taking a closer look at the smallholder families from a very comprehensive lens, trying to document in detail what are the diverse livelihood strategies that smallholder families have and get some primary data on them so that we can make more informed decisions. As part of that work, we, in partnership with InterMedia, started collecting nationally representative smallholder surveys in 6 countries, which you see on the screen, one of them being Bangladesh, to kind of get deeper insights on their financial needs, their financial behavior, and the diverse livelihood strategies that they pursue that shape their financial needs. So today with us, we have Alex Moeller from InterMedia, who will be sharing some of the findings and the methodology that we use to compile this information in Bangladesh. And we will go over these findings to kind of shape a bit of a segmentation proposed for smallholders in Bangladesh based on their characteristics. And we'll discuss the implications of that for financial service providers, policymakers, and practitioners who want to support access to a wide set of financial services. So with that, I'll let Alex Moeller tell us a little bit about the methodology and sample design. Alex, please tell us about it.
Thank you, Emilio. So as Emilio mentioned, this project in Bangladesh is part of a series of nationally representative surveys in Eastern Africa and South Asia. In pursuit of this, we conducted 3,000 interviews at the household level as part of a three-part survey program. We interviewed individuals at the household level, at the individual level, individually selected from all household members, and administrative survey to all household members as well. So this gave us 3 sets of data that we were able to triangulate when identifying the needs, behaviors, and knowledge of the individuals living in smallholder households in Bangladesh. To identify the households that belong to the smallholder category, we attempted to set a definitional parameter that wasn't too restrictive as to eliminate large amounts of household members while still capturing the range and diversity within the smallholder population in Bangladesh. As you can see, our household identification parameters involved land size and size of cattle and herds, as well as a self-reported or self-identified reliance on agriculture as a income generation method. We implemented a three-stage sampling stratified multi-stage design based on the 2008 National Agricultural Census, stratified by urban and rural locations. We conducted a household listing exercise, which enabled us to calculate the precise probability of selection when we did post-stratification weights to ensure that the results are reflective of the national characteristics. So all members who participate in agricultural activities and a randomly selected member, regardless of their participation in the household's agricultural activities, participated in the survey and provided responses.
So, so having said that, this is basically a first of its kind of survey, right? It's a national survey that is wholly focused on the smallholder population, and this is quite a unique survey, if you will, because other surveys, although they might have included the smallholder population within the sample, they're not specific to smallholders, are they?
Yeah, exactly. It's unique for a couple of reasons. One is the scale in which it was done. It was designed to provide comparable data across different countries and cultural contexts, as well as the context of agricultural households themselves within the different countries. So there was quite a bit of work done to ensure that the survey instruments, of which there were 3, were able to be consistently applied across countries. And then when the segmentation was actually conducted, that the outputs would be comparable as well. So there's a real ability to derive findings here and identify trends that are consistent across the smallholder population within the countries, as well as within the countries and across the countries. In addition to that, there have been projects that focus specifically on smallholder households. But what this does is it captures the range of smallholder households within the broader population, and it also captures the intra-household dynamics by administering 3 different surveys to the household members. That way, we have the ability to triangulate data. We have the ability to identify different characteristics and different behaviors depending on one's position within the household, rather than just taking the household and enforcing it down on all members of the household. So for these reasons, the program is unique and innovative, and will result in real usable data.
Thank you. So this is the slide that you see right now is a summary of the findings, and we'll go into much depth of each one of these bullet points. But basically, we find that about 55% of smallholder farmers are not financially included, despite the very wide progress of financial inclusion in Bangladesh. We also get insights on strong demand for agricultural-specific financial products, but in addition, other type of non-agricultural financial products that the household needs. So there's diversity in those needs, which are shaped by a diversity of livelihoods strategies implemented by the smallholder families. Most of the financial information that's available is informal, and for that reason, hard to validate. But there's a very strong loop of networks that possess a lot of information about the livelihoods and the financial needs of smallholders that we should tap on. And there is a very strong commitment from different players, agribusinesses and financial service providers, of targeting these smallholder families, which we should build on. Some of the key implications for financial service providers that we'll discuss more in this presentation relate to the idea that this diversity of financial needs really represent an opportunity for different types of financial service providers to respond to. So even though smallholder families do need agricultural financial products, they not only need that. They also need other types of non-agricultural financial products, like, for example, financial services to deal with educational needs. And we'll go over several others in the sample and provide you some statistics on that. At the same time, there's quite a bit of opportunity to aggregate services from financial service providers in order to reach out to the smallholder families, aggregating each partner different types of services so that a package, if you will, is offered to them, which raises a lot the value for the smallholder, but also helps out with the economics of feasibly providing services to this target population. So with that, we'll go into a bit more specifics on some of these findings, and I'll let Alex talk about.
So the broad population profile, smallholders in Bangladesh are primarily living below the poverty line, but what is most stands out here is they're not only living below the poverty line, but living below the extreme poverty line. Over a quarter of the population lives on less than roughly $1.25 a day, according to the Grameen Progress Out of Poverty Index, which was implemented as part of this survey. So smallholder households span the country. They're primarily led by middle-aged men with limited formal education. That said, smallholder populations are less dependent solely on agriculture or rearing livestock compared to their counterparts in other countries of focus. So, for example, 10 to 20% of Tanzanian smallholder households, more than smallholder households in Bangladesh, report that agriculture is, the sole and primary income source. As Emilio mentioned, there are signs of, strong financial behaviors, even if they're not formally followed. So Bangladeshi smallholders are frequent savers, but this saving is largely relegated to informal channels. Monocropping is common. 45% of the smallholder population grows only one crop, usually rice, for consumption. 28% grow only one crop for commercial purposes. This poses risks from a disaster preparedness standpoint. It leads individuals to be subjected to changes in weather, past market conditions, etc. That call to the need for perhaps income smoothing products or products that allow, or disaster mitigation products. Finally, nearly three-quarters of all Bangladeshi smallholders to this end, three-quarters of all Bangladeshi smallholders have had their agricultural activities seriously affected by unexpected events, mainly related to weather or pests. So related to this, smallholders in Bangladesh assign great importance to setting aside money for a wide range of agricultural needs. There's a very close correlation between the perceived necessity of setting aside money for a given activity and the actual behavior related to that. So, for example, respondents who want to respondents who want to keep aside money for fertilizer are most frequently actually keeping aside money for fertilizer, etc. There's also a relatively strong correlation between perceived importance, desire to, and actual behavior. So over half of smallholders involved in agricultural activities actually put aside money for some sort of seasonal crop input, seeds, fertilizer, pesticide, irrigation. So there's an underlying behavior of saving for commercial purposes that is not necessarily being captured by offerings of formal financial products related to these specific desires and behaviors. Most smallholders are storing crops after the harvest, primarily to wait for better market prices. But again, these market prices are not being communicated through any sort of regular or formal informational dissemination means. friends and family are serving as the primary source of financial or income-related advice. Friends and family and community members also serve as the primary sources of agricultural-related information. There are sources of authority, but these are relatively less harnessed compared to informal personal channels.
Maybe one comment there, Alex, is this plot helps us visualize how within the needs for agricultural finance, there is a very high perception of categories that are very related to longer-term investments. You see equipment, you see ag machinery, you see irrigation there. Investment as relatively large, important needs that a big share of the smallholders have, which may not correspond with the offer that they have either from formal or informal financial service providers. So that could be also an opportunity.
Absolutely, and it's something that we'll see in coming slides, where there is a strong inclination to save not for necessarily immediate needs, but forward-looking needs that are, designed to not only expand one's agricultural pursuits, but deepen the engagement in agriculture itself. And related to this ability to disseminate information and maintain, constant communication with sources outside of the informal personal loop, is ownership of mobile technology. So smallholders in Bangladesh widely perceive the mobile phone as important to the household. To that end, 3/4 of smallholder individuals own mobile phones, and over 90% of the households actually have at least one mobile phone available. This recognition of the importance of mobile phones is nearly universal, but it's really relegated to personal communicative features. So the benefits of owning a mobile phone, talking to friends and family is a nearly universal perception, but getting information related to crop production is minimally recognized as a value of owning a mobile phone. And this perhaps points to a failure of the market to properly communicate the benefits that mobile technology offer when the full scope of their potential is realized.
And probably just to highlight the big difference between the percentage of smallholders that own a mobile phone and use it frequently, 90%, versus the percentage of smallholders that have a registered mobile money account, only 19%. So that to me suggests a big potential for greater applications of digital financial services using the mobile platform.
Exactly. Readiness to adopt DFS is really predicated on the ability to have access to a mobile phone and competently use that mobile phone. And so for individuals who are frequently talking to friends and family, using SMS messaging, the actual competency skills are there, and it's now really a question of knowledge of how the products can be used, rather than like the underlying infrastructure or functional concerns.
Thanks. So I will discuss a bit more the findings related to financial inclusion. As we hinted initially, there are about 45% of smallholder families who are included by this definition of owning an account, sole ownership of an account in a formal financial institutions. There are well-recognized benefits from the smallholders of owning a full-service account. There is a very good trust perception among smallholders from many formal financial institutions. However, those percentages are not exactly the same as the actual percentages of account ownership, meaning that there are many smallholders who do not own an account, but would like to entrust already those financial service providers, which is something quite positive in the context of Bangladesh. Next slide, please. So in terms of the importance that they assign to formal financial services. Certainly, the bank account is something that is very appreciated, but not many smallholders have. Only 8% of smallholders attempt to borrow from a bank in the previous year, and much of the lending that they receive really comes from informal financial sources. They show a very good practice of prioritizing savings for the future, and the lack of use of formal financial institutions that accept savings indicates that there's likely a big share of savings that is done in an informal manner, either through saving under mattresses or savings in terms of buying assets and keeping them. And they have very good, well-defined investment priorities for which they save for. Asking a little bit more about the type of services that they have versus the type of services that they desire, we see quite big discrepancies. This graph is showing an example of several of these financial products. We have smallholders at national level reporting that they use savings plans for inputs. They use payment plans for inputs. They also use goal savings and credit for school fees. However, if you see the percentage of smallholders that report that they use these services versus the percentage of smallholders that would like this service, there's a big discrepancy. And this represents a niche opportunity for financial service providers to respond, especially as we said, some specific products like credit plan for school fees or savings plans for school fees, which apparently are not offered at all, at least in this segment of smallholders.
So that is a broad view of the population of smallholders as a whole. One of the core components of this program, or the smallholders research program, is segmentation of the households and segmentation of the household members. Here, segmentation refers to the process by which similar types of smallholders are grouped together for comparative analysis. So what we did at InterMedia was use a random forest approach to identify correlates of financial inclusion and meaningful cleavages within the population. That is, we identified variables that strongly predict financial inclusion and use these variables to sort the members of the smallholder population into discrete groups that share similar characteristics. So rather than separating the individuals along the lines of a single variable, say inclusion or poverty level, we sorted them in a manner that captures the spectrum of different types of subpopulations within the entire population. Now here, Bangladesh presents a unique case, as other countries with smallholder populations, such as Tanzania, tend to have populations with more distinct cleavages. Bangladesh had fewer distinct groups or segments, and the lines between these segments were blurred to a degree at the extremities, indicating that while the population does have there are distinct patterns among the population and subpopulations, the population overall is a bit more homogeneous. So we arrived, after completing the random forest exercise, we arrived at 4 distinct segments. These segments are farming for sustenance. These are the quintessential farming households that struggle to support its needs, and they could potentially stand to gain the most from financial inclusion. This represents about a quarter of the population. Then there is battling the elements, which is a slightly more secure and stable group than farming for sustenance. They have a slightly greater degree of financial inclusion, but they're mainly characterized by being exposed to significant agricultural disruptive events. Sort of moving up the spectrum, are options for growth, which you start to see, in the next two segments, you start to see more stability overall from an economic and income generating perspective, as well as increased engagement. So the options for growth category are individuals that have, that highly participate in agriculture, but have distinct potential to move into other pursuits. And then finally, you have the strategic agricultural entrepreneurship segment, which represents 11% of the population. These individuals serve as the sort of model for growth. They're highly and deeply involved in agriculture. Agricultural activities generate large sums or large amounts of income. The agricultural activities are diverse with respect to number of crops grown, number of animals that are reared for livestock, or number of livestock that are used for commercial purposes. So we'll go deeper into each segment, starting with or following an overview of the financial inclusion by these segments. You can see that there are two really sets of segments. The lower two, farming for sustenance, battling the elements, which are more vulnerable and disadvantaged. They fall below the population financial inclusion mean compared to options for growth and the strategic agricultural entrepreneurship, which are less vulnerable, less disadvantaged, and fall above the population mean for financial inclusion. So quick overview of the first segment, farming for sustenance. 77% live below the extreme poverty line. The mean reported monthly household income is 8,000 taka, compared to the population mean of 12,000 taka. They have limited access to land, with the amount of land that is almost half of the mean population size. 30% engage in monocropping of rice, and only 29% are registered or have a personal account at a formal full-service institution, primarily NBFIs. Moving up the ladder, you see the battling for elements segment, where only 3% compared to 70% live below the extreme poverty line. 80% of the segment's members, though, have experienced agricultural activity or have had their agricultural activities impacted by extreme weather. Inclusion increases to 40%, and you start to see a shift towards more traditional means of inclusion, so banks, as well as the innovative means of inclusion, specifically mobile money, where registration over doubles compared to the previous segment. Moving into the less vulnerable segments, options for growth. Options for growth members, the typical member has 3 different income sources, so there is not a sole reliance on agriculture. 30% of this segment's members report running their own business in a manner that's distinct from their agricultural pursuits. The majority of the segment's members are financially included, and inclusion here is comprised of a diverse set of account ownership. So no single account type is held by the majority of members compared to the previous two segments, where most individuals in those segments who were included had a NBFI or MFI account. And then finally, you have the strategic agricultural entrepreneurship segment, which represents 11% of the population. Here you can see that nearly 70% live above the poverty line. No members of this segment live below the extreme poverty line. There's a 19,000 taka per month mean household income compared to 8,000 taka per month of the lowest segment. They have a substantial amount of land that they have access to. 70% of the smallholders members are financially included. And here, compared to the other segments, inclusion is driven by bank ownership. So there's a correlation here between access to a broader range of financial products and an ability to properly harness the opportunities afforded to them. Nearly 90% of the segment's members save money, with a typical member saving through at least 2 savings channels. So they save through banks and at home, or through banks and with a village level savings group, etc. These profiles of the different segments have distinct market implications, which Emilio will discuss with you.
Thank you. So as you see, segmentation is a helpful way to categorize the very heterogeneous group of smallholders and find niche opportunities for different financial service providers. We see that the more financially included smallholders are, the better they are at diversifying their livelihoods. They diversify the crops grown, their incomes and land size also increase. That's a bit what this diamond diagram is showing. So diverse financial services are certainly a very useful tool for smallholders to seize those opportunities that they are facing. And the most vulnerable segments of the smallholders that we've described are the ones that, for one, are the largest in terms of the population size, but also the ones that have a bigger growth potential already that financial service providers can certainly try to promote and seize. One important implication, we think, from the data that we're seeing is that youth heads of households are dispersed relatively even across these four segments. And although we see that the majority of smallholder households are dominated by older male figures, there is a steady percentage of youth engaged in agriculture that we could exploit given their greater tech literacy. Right? So they may be a good entry point to increase the use of digital financial services and promote the ability of youth to remain profitably in agriculture. Second, we also see that the most financially excluded, let's say from within the financially included smallholders, the biggest share of them are being served by non-bank financial institutions and MFIs. So they are the type of financial service provider that has already gone through a long process of learning how to deal with this clientele. And but we also see that their model reaches a limit in terms of outreach, right? And aggregation of services seems to be a trend that we see as a way to increase that outreach, being able to work with other partners so that your products and services are complemented by these other partners, and the feasibility of reaching out this clientele in a cost-effective manner increases. So this leveraging of financial and non-financial service providers is something that is already ongoing, and where digital solutions seem to be very promising, given that there's this digital readiness so prevalent and marked in the smallholder population that we should be able to exploit to achieve financial inclusion. So with that, we conclude our presentation, and we would like to ask our guest speakers to provide a little bit of comments and insights as to how valuable do you see this information, and how much, what is lacking, and how does it fit with your current working agenda. I asked my colleague Shamaran Abed to start. Shamaran, please go ahead.
Thanks very much, Emilio. I just want to make sure that you can hear me.
Yes, we hear you loud and clear. Thank you.
Great. Thanks very much. Thanks very much for inviting me to comment on the findings of this important survey. Obviously, just to start off, I should say that at BRAC, we care deeply about financial inclusion, especially financial inclusion for smallholders, because the majority of the world's poor are smallholders. And if you look at Bangladesh, for example, specifically, obviously, for the purpose of this survey, almost all farmers in Bangladesh are smallholder farmers. So if you just look at the criteria that you used of 5 hectares, even your largest segment the 4 segments that you did was well below that in terms of average size. So we are really a country of smallholder farmers, and a lot of the people that we work with through our different interventions in microfinance and other programs are basically mostly targeted towards smallholder farmers. So just coming to the survey, I think the first thing I would say is that the findings more or less confirm what we've learned working with this segment over time. So I think that's good. I don't think, at least for me, there were any large or big surprises, except, of course, to say that, it was a stark reminder once again that even after so much work in microfinance and other livelihoods programs for more than 4 decades, there is still such a big unmet demand. I think your survey finds that 55% of smallholder farmers are still financially excluded. So there's still more than half that are still excluded in a country where there's very large, at least microfinance penetration and a large financial sector. The segmentation that you did was actually very helpful. I think I found that very interesting. And I agree that you can probably bunch the first 2 kind of together and then the last 2 together. Most of our focus obviously is with the first 2 because that's the population that's particularly vulnerable, more vulnerable to things like natural disasters, but just generally have less savings, have less social capital. So that's a group that we work with a lot more. The third and the fourth groups, obviously in the broader definition, still are smallholder farmers, but in the Bangladeshi context, relative to the first 2 groups, are much better off and probably get access, and your survey finds this as well, already has access to financial services and are able to access information and markets and inputs and are doing much better. So I'll try to focus more on our work with the first 2 segments, even though we don't have exactly the same segmentation, but that more or less corresponds with the way we stratify our target groups and the community that we work with mostly. So if you look at that, those 2 segments, obviously from a financial inclusion point of view, the commercial banks don't serve these segments at all. And I think that's not anything unique to Bangladesh. I think you'll find this almost in any country where we go. There has been a lot of pressure from the central bank to get the banks to start doing a lot more agricultural lending and also to lend to smallholders. But of course, the traditional commercial banks, given the way they're set up, given their compliance requirements, given basically the unit economics of giving out loans, don't provide credit to this segment. So what they do is they tend to put a lot of money through the microfinance channel to satisfy the central bank requirements. So the microfinance sector in the last, I would say, decade or so has actually received a lot of funding, some at even preferable rates, to lend to agriculture mainly, but specifically to smallholder farmers. So there's been a lot of agricultural lending, but I have to say that a lot of that is through the typical sort of your vanilla microfinance 1-year monthly collection, monthly repayment method. So even though a lot of agricultural lending is done, very little of that is actually flexible products targeted specifically for smallholder farmers. I should say we tried it and we also didn't do very well with it. So I'll give you an example of one instance where BRAC tried to do a more targeted flexible product for smallholder farmers. About 7 years ago in 2010, we got funding directly from the central bank to lend to one specific segment of smallholder farmers who we call sharecroppers. So they're basically farmers who don't farm on their own land, but farm on other people's land. We initially developed the product in a way that, and these were mainly to farmers who did 2 crops a year. So we did a third of the installments would be paid after each of the 2 harvests, and the final third would be paid in equal monthly installments over the period of the year. We actually found that, and we thought that this was going to really suit the farmer cash flows and they would really like this product. But after a couple of cycles, we actually found that this was turning out to be something that the farmers that we were lending to this was turning out to be something that actually were not suiting their cash flow. So we went back and tried to find out what was happening. And a couple of the findings in your survey actually correspond very closely to what we found at that time. So I think in slide 5 or slide 6, you say that most smallholders store crops after the harvest, primarily to wait for better market prices. And we found this a lot. So a lot of our farmers came back and said actually paying a large bullet payment after each harvest or right after each harvest was actually problematic for us, because we'd have to sell off right away when the prices are the lowest. And if we could just hold on to our stock for a month or two, we would get a much higher price. So what we were doing was actually forcing them to do something that was against their interest. The other thing we found was, and again, this is something we knew, but when we went and looked at this more closely, this again confirmed that, and again, this is in slide 5 of your presentation, that smallholders in Bangladesh are less dependent solely on agriculture, and this was true also for this segment. So between planting crops and harvest, there was most of these farmers were also basically selling labor. So there is a constant sort of regular income coming into these households. So when we went back and asked them, they basically said to us that, paying small sort of regular installments, the typical microfinance product actually works out better for us than these products where we have to pay large lump sums after harvest. So ultimately, we actually went back to our typical, again, our vanilla product, equal monthly installments, and it ended up being something that the farmers that we were working with actually liked a lot more. So that was kind of an interesting, experience for us, because we were trying to do something which we thought was more flexible, but we ended up going back to our pretty typical rigid product. That is not to say, of course, that there isn't a need for flexible agriculture products. I personally think that there is quite a large need for it. So now what we're doing is trying again with other types of flexibility. So providing sort of vouchers. So if you can't pay during a certain time, you can pay in your voucher, and that gives you a grace period. So more flexible grace period system and things like that, just to give farmers more flexibility. And I think what you'll hear from Majidul after me is I think they're trying something with, providing complete flexibility. And I think we also are very interested to find out how that works out for them. So I think, flexibility is important. We still haven't obviously figured out how to do it well, but we're trying to do that. Also, in addition to credit, there is also need for other types of financial services for smallholder farmers. And I think one thing that also, again, is confirmed through your survey is how vulnerable smallholder farmers in Bangladesh are to natural disasters. And I think somewhere in your survey, you said 3/4 of all smallholders reported that at some point they had been seriously affected by unexpected events. That, again, is something that we see a lot. Again, we've dabbled, or at least, thought a lot about what kinds of products would provide resilience against these kinds of events. So obviously, insurance is something that we've looked at, but again, I have to confess that it's not something that we've been very successful at providing. So again, a couple of years ago, we tried to do it. We didn't do well. We're trying again to look at sort of crop insurance, weather indexed insurance, working with people who know how these things work and have done it in other countries. But just to say that we do have a constraint in this particular sense in Bangladesh, because we're a very small country geographically with a lot of people packed in. So, weather events tend to affect the whole country, right? So in the past, when we've tried to work with things like, weather indexed insurance, basically what we found was in large countries like our neighbors in India, you can have flooding in one part of India, but, fairly dry in other parts of India, or you can have droughts in some part of India, but not in many other places. But given how small Bangladesh is, when we get flooded everywhere. When we have droughts, we get droughts everywhere. So in the year that there is a natural disaster, there's a large payout, which means that when you build that risk into the pricing tends to be quite high. And then we worry about whether the pricing is, whether the products and the premiums are affordable for our farmers. So that's sort of the challenge that we're in. And again, we're trying to see if we can find some innovative ways to get around that and provide good sort of insurance products at affordable prices to farmers. So again, something that we're trying to do some work on, but again, very little to report at this point. From the BRAC perspective, I would also say that we also see a lot of need for agriculture extension services. So it's not just financial services. There is a lot more need for, access to information, access to inputs, access to markets. These are things that BRAC has done a lot of work on over the years, but of course, there's a lot more that needs to be done. On the mobile money issue, I'll just quickly touch on that because of my role also with bKash, which is the largest mobile financial service provider in Bangladesh. Again, a very successful implementation of a mobile money platform, but it's still largely being used as a P2P domestic remittance channel. And at this moment, there hasn't been a lot more done through the bKash channel, and I agree that there is a lot more that can be done and needs to be done. One constraint, again, I would say is the bKash platform right now runs on the USSD network, where all the menus and everything are in English. So when we work with really poor people, and in our experience also with our microfinance clients, our clients, typically illiterate, find it very difficult to navigate these menus and transfer through the wallet, which is why we are also seeing a lot of over-the-counter transactions in Bangladesh. So that's also something just to keep in mind, that it's not just a question of putting more products on the wallet. We also have to do a lot more in terms of actually teaching, poor people in rural areas how to use this wallet. I think the game changer there will be basically app-based systems, but for that we also need a lot higher smartphone coverage. Right now, the smartphone penetration within sort of these kinds of segments it's still very low. So right now it doesn't make sense, but obviously these things are changing so quickly that at least from the bKash point of view, we hope that in the next 3 to 5 years there's going to be widespread use of smartphones. At which point we move from sort of USSD to app-based things, and obviously we can put a lot more products onto the bKash platform. So I'm aware of time, so I'll try to stop here. But just to sum up, I'll say a lot more work needs to be done on the product side as well as on the distribution side. And of course, if we can build wraparound services and extension, I think that's going to be what's needed. Yeah, so I'll stop there, but happy to take questions afterwards. Thank you.
Thank you very much, Shamaran. We'll let Majidul do his intervention and his comments on the findings.
Hello.
Hey, Majidul,
thanks, Emilio.
We hear you well.
Okay, great. So thanks very much, Emilio and Alex, for this very fantastic presentation, and also many thanks to Shamaran Bhai for his insightful comments. So it was really very informative and researchful, research and the findings. So we actually found many similarities with these survey results while implementing digital financial services within smallholder farmers, because from MSR for last couple of years, we are actually working with this very group of people to introduce and for the adoption of digital financial services. It was to introduce digital payments. Sometimes it's the formal financial services like credit, savings, payments, etc. I think I have to work on audio connection.
Yes,
So,
Majidul, could you? We have a comment. Could you speak a bit louder to the microphone so that we can hear you better?
Okay, so is it okay now?
Yes, if you get closer and speak a bit louder, that would be fine.
Okay, sure. So just what I said, so I just want to share those field-level DFS implementation experiences, because the similarities between the survey results that we also found in our various assessments for the digital financial services. So our work is really centric towards financial inclusion and the digital financial services. So our interventions was also in that particular segment. So we found strong needs of access to formal financial services like credit, savings, payments, and other services among smallholder farmers. From our DFS assessments for ag value chains, agriculture value chains, and separately rice value chains, we found that in the starting phase of a farming season, farmers usually in need of some sort of financial support to address different financial agriculture activities. That also is a very important findings from your survey, and that is like those agriculture activities that include purchasing seeds, pesticides, irrigation, fertilizers, and few others during that season. So usually to meet those financial needs, farmers either visit local MFIs or some other informal channel. That is definitely at very high interest rate, like sometimes it ranges between 25% to 31%, and that is justified because of the distribution network and other operational costs. And of course with some with weekly repayment, which is actually challenging for farmers with limited additional income generating activities. So or they take loan from MFI or from informal sources like Dadun Babshai. You might have known that name because in Bangladesh it's a Dadun Babshai, a type of individual lender who lend money with high interest rate with strict repayment terms and conditions. So farmers also purchase inputs from input retailers on credit. For all of these cases, the impacts are same. Farmers always in a hurry to sell their crops immediately after harvesting to clear dues with the lenders, and therefore farmers don't get good price for their crops, as that is usually the peak season and almost everyone is selling their crops. In addition, few input retailers also push farmers to purchase some fixed brand agricultural inputs, as they get maximum commission from those suppliers, and also because of that farmers are purchasing on credit. So therefore farmers don't have usually any bargaining power to choose quality inputs. This not in the all cases, but in some cases. So these all actually directly affect farmers' income. To address these challenges, we recently held two USAID funded projects. One was Rice Value Chain project of IRI Bangladesh, and another one was Agriculture Extension Support Activity project of Dhaka Asenia Mission, to test microcredit solutions with two separate digital financial service providers. One was IFSC Bank and another one was Bank Asia, and targeting definitely smallholder farmers. And the testing, we actually tested that microcredit solutions through two different DFS channels. One was card-based agent banking channel, and another one was MFS channel. So the loan amount we decided to offer was between BDT Bangladesh Taka 10,000 to 20,000 Taka at 10% yearly simple interest rate with 6 months of repayment. Along with it was with overdraft facilities. It means like farmers can pay anytime within this 6 month period, and interest rate is applicable on that amount only what he or she used. So we also involved input retailers with this pilot, so that farmers can purchase agricultural inputs from those retailers via card or MFS channel. So the impacts that we found is very interesting. So from our recent survey of those participating farmers, it appears that like in addition to the better interest rate and flexible repayment terms, the loans have also enabled farmers to have more flexibility in the types of inputs they purchase, as farmers are no longer dependent on credit from retailers. And when they can sell their crops, as the flexible repayment terms enable them to sell their crops later at a higher price rather than rushing to sell. So it actually changing farmers' crop selling behavior and also inputs buying behavior. So you would understand the acceptance of such financial services among smallholder farmers by seeing that growth. We started this pilot with 130 farmers at 2 different districts and with only 10 input retailers, and that was on August 2016. And through April 2017, now the total number of farmers has been registered with the service is 2,500, and 50 retailers, 50 retailers have been registered for receiving these digital payments, and they were pretty interested to come into this pilot. And many more farmers are also interested to explore the same. So from these very impacts of those interventions, along with the findings from the nationwide survey that CGAP and InterMedia did, are actually showing some very clear indications that there are much need of access to quality financial services by the smallholder farmers. So it was pretty experience from very field level that actually matched with the findings that you just presented, Emilio and Alex, today. And we are working on those limitations and challenges that smallholder farmers are facing for last few decades. So let's see what happens with these pilots, but we are not quite sure yet whether these microcredit solutions actually can work in large scale. But we are trying to formulate some different other models, but considering the basic things still in the same way. But
Majido, your time is up. I was wondering if you could just wrap up with a couple of conclusions so that we can proceed to questions and answers.
Yeah, so actually that's all from my end, because I shared those interventions findings and also that the similarities between the survey findings. So from my end, I think it's good for I think we're good. I'm good for now.
Okay.
So.
Thank you. So we have several very interesting questions coming in. We'd like to start with one that perhaps Majido or Shamaran can comment on. It says mobile network operators are not allowed to operate or invest in mobile financial services. This distorts the market, and Bcash has a 90% market share. How should mobile operators position themselves to better serve smallholders? Perhaps we start with you, Majido. Would you have any comments about this question about how mobile network operators should try and reach out to smallholders?
Yeah, it's true. It's a bank-led model is allowed in country that is according to the central bank guidelines. So MNOs are not allowed to offer this service. Actually, they can own this service. So, but they can partner with the service providers like digital financial service providers and can reach to those smallholders. There are many ways, and they are also trying to explore free options. So while I was working with Das Bangla Bank, so we also worked with Shakti Foundation to disburse microcredit to the farmers level. So we work with Airtel, in Bangladesh, one of the MNOs. So we jointly work and to ensure these microcredit solutions to the end farmers level. So what we did, like it was a kind of a partnership. So Airtel offered some free SIM to the farmers level, and they could use that for other purposes also, but also to register with the mobile financial services. And to those wallet, farmers were receiving microcredit that has been disbursed from Shakti Foundation using digital channel. So that was one of the very few approach that we have experienced in the country, where actually financial DFS providers and MNOs work together for reaching towards smallholder farmers. And it's true that Bcash is holding a huge market share in terms of customer number of customer, and also in terms of transitional market share. But it's also because of their vision and their core focus on this particular business, and this is of course a very appreciable thing. And but there are options, because it's not only a single operator who can actually cover the whole market. So there 19 MFS providers in our country right now operating, but only 2 who are actually prominent. So this is not only depending on Bcash that they can actually ensure this financial inclusion thing. This depends on the overall the industry, that how they act and how they actually approach to reach to those very unbanked community.
Thank you. Shamaran, you're welcome to comment on that last question, but there's another one also that I think maybe your insights are valuable. Are there any examples on how to bundle loans, insurance, and other types of services that you have, the BRAC has explored? And any comment on this issue of mobile financial services is also welcome.
Yeah, sure. So on the first one on Bcash, so what I would say is that, as Majidul said, yeah, the mobile network operators aren't allowed to own MFS platforms right now. And personally, though, I wish the central bank would open it up. But that's, the bigger point is, had there been MNOs or had MNOs been allowed to do mobile financial services, would they have actually covered the smallholder segment that the others or Bcash is not covering? And I don't see any evidence from anywhere in the world that that's happened. So I don't think the point is that the smallholder farmers aren't included in the financial system because MNOs aren't in the MFS system. Obviously, in Kenya and Tanzania and many other places, it's the MNOs that own the mobile financial services platforms. But those countries also have high degrees of financial exclusion for smallholder farmers. So I don't think, I mean, I agree that there's that problem. I don't think, though, that if we solve that problem, we solve the bigger issue of smallholder exclusion. On the second issue of whether there are examples of bundling, yeah, we have done bundling of different types of financial products, obviously, and we've done credit and insurance as well. But these are more sort of, the recent one that we've done is a more traditional sort of credit shield insurance. We've dabbled again a little bit into micro health insurance, and that's again a new area of work for us that we've put a team onto. But in terms of the kinds of insurance that smallholder farmers need, again, as I mentioned, to crop and weather index, things like that. I haven't, at least in the Bangladesh market, I haven't seen very good examples of that. Although there are some interesting examples in India. So yeah, I think there are examples globally, but not so much in this market.
Thank you very much for those answers. There are a couple of more interesting questions, but we have run out of time. And we will send right now our contact details so that you can send us your emails with additional questions. So we hope that this has provided some food for thought to all of our participants. We thank very much for their time. We thank you very much, Majidul and Shamaran, for the time you dedicated to commenting. We know the rich experience that both of your organizations are accumulating has been very, very much valuable to further financial inclusion in the country, including smallholders. And with that, thank you very much, and we hope you have a very nice day.